Today I want to talk to you about bank personal line of credit for fair credit and low income. So this is if you find yourself in the category of having low income and also fair credit, and you are interested in getting a bank personal line of credit, then this conversation is for you. I'm going to teach you how to get a massive line of credit amount the first time you apply, no matter what. So stick around till the end of today's conversation. Welcome back, folks, to another edition of the Awesome Sort of Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you're to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about bank personal line of credit for fair credit and low income. Okay, how do you get a massive loan amount or line of credit amount the first time you apply, no matter what? So I want to give you some steps. It's very important that when we talk about a methodology, that we have steps. Okay, so let's talk about steps. Number one, let's talk about your MPR, multi-product relationship. So you want to apply at a bank or credit union with which you have a relationship. And I'm not just talking about any kind of relationship, boss. I'm talking to you about a strong relationship. You probably have 3 or 4 bank accounts, okay, at different institutions. Okay, that's fine. But you want to focus on the institution with which you have the strongest, the longest, relationship. So we're talking about the length of account history. We are speaking about a variety of accounts. So we are having a conversation about savings, checking, IRAs and whatnot, MMAs, money market accounts. You have CDs, certificate of deposits. Okay. So we have a constellation of accounts we're looking at. And make sure that you actually keep very low NSF counts. We're talking about non-sufficient counts, non-sufficient funds counts with the bank. In other words, you want a bank that has a clear history with you, that has a positive impression about you, okay, about your banking history, about your deposit history, okay. You want to apply at a branch or over the phone. I want you to ditch the whole thing about applying online. Everybody wants to apply online, blah, 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 blah. Go to a branch. I want you to bring your ass to a branch. I want you to take the time to go to a branch or even over the phone, but you need to have a conversation before applying. Just applying online and just filling some data, blah, 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 blah. This will not get you approved, especially if you have fair credit and low income. I want to emphasize the income part, low income. Okay, but when you talk to someone, you can actually contextualize the application. You can actually explain things. They can ask questions. This is a give and take, okay? It is a back and forth. And through that back and forth, you are boosting your approval odds. This is why you want to do things at a branch or you want to do things over the phone, okay? It's important to contextualize the low income you currently have. In other words, you want to explain why you have low income, and most importantly, your ability to increase your income in the short or medium terms. The second thing I want you to pay attention to is your DTI. Okay, you got to find ways to lower your debt to income ratio. Oh, this is important. This is really important because obviously you have low income, which means what? It means that your DTI is relatively high, unless you have a lower level of debt also. Because DTI is really a fraction if you think about it, right? So on top you have your debts, your total debts, and at the bottom you have your income. So if your income is already low, you better have a low level of debt also to maintain a low DTI, and that's what you want. You want to have a DTI that is around a DTI ratio that is around 30% or 35%. That's what experts agree. It's a healthy, quote unquote, a healthy DTI. Okay. And the thing is, you want to ask the income requirements for the line of credit that you want to apply for. This is why I was just telling you earlier, it's better to go to a branch or over the phone. So you can ask all the questions that you need. Okay, and you want to explain your plan to reduce your DTI. So let's say you have a high DTI right now. You have a DTI of 40% or 45%. Okay, what is your plan to reduce your DTI? that's the question I want to ask you, and I'm asking you. I'm asking you, boss. What is your plan? Okay. Do you have a side gig in the works? In other words, are you having a second source of income? Because the whole thing is, if you have a high DTI, the only way you can reduce it is either by increasing your income or reducing your debts. And everybody knows that when you have debts, it's kind of tough. And when you have debts and a lower income, it's kind of tough to reduce the debt. So the thing that is easy is because debts, you can only pay them off, but you need money for that, right? But you can increase the income side of the equation. So so in this equation, you have income and debt. So take a second job, for example. Are you having an upcoming raise at work? Are you being promoted? Talk to me about that. So you want to raise the prospect of co-signing to propose a higher income. More on that later. So if you have low income, you can actually co-sign the loan so that in the aggregate, you have a higher level of income. Okay. So let me talk to you about the approach. So when we talk about DTI, you need to have a plan, an approach that allows you to monitor, first to calculate your DTI, to monitor it, to continually monitor it. Okay. So every month you want to look at your debt level, you want to look at your income level, and you can plug things in Excel or you can plug things through apps. But the whole thing is that you want to be in a position where you are working on reducing your DTI continuously. Very important. I want to talk to you now about proceeds. So use of proceeds. See, the thing is, when you apply for a bank personal line of credit for fair credit and low income, the bank is going to ask you, what do you need the money for, right? And make sure you can explain, you can articulate how you will use the money. And this is, by the way, this is a regulatory requirements. Banks need to know what you're going to use the money with. Okay, this is just what it is. And remember that it's important to understand that personal lines of credit are only temporary. So when you apply for one, you will usually be given a specific time period for when you may withdraw funds, called a draw period. Okay, and if you still have an unpaid balance on your personal line of credit, when the draw period ends, you will enter what is called a repayment period. Okay, so during a repayment period, you'll have to pay off any remaining balance. Okay, however, different banks may have different terms for repayment. This is why I want you to ask your banker when you have a conversation with at a branch or over the phone. Okay, and the various types of repayments may include some of the following. So you have draw and repayment periods, you have balloon payments, you have demand line of credit. It's totally up to you. It's totally up to you and up to the bank that's giving you the money. Okay, it's very important to have to raise all questions, to raise all red flags, if any, beforehand. That's the bottom line here. Okay, that's really the bottom line. And one thing I also want to say here is that you want to actually have a plan to repay the loan. I'll speak about that later on, but yeah, that's what it is. Now let's quickly go through a few pros and cons when we speak about bank personal lines of credit for fair credit and low income. Here are the pros. You have quick access to funds, overdraft protection on some accounts, competitive rates compared to credit cards. Okay, no collateral required, especially when we talk about unsecured lines of credit, and you only pay for the draws that you make. Okay, so those are the pros. What about the cons? You have higher rates than HELOCs. So HELOC is a home equity line of credit. Okay, and the interest is not tax deductible. It's hard to qualify with poor credit and or limited credit history. You have the risk of over borrowing, and you have variable interest rates depending on the bank. So money. My question to you is, do you have a plan to repay the loan or the line of credit back during the repayment period? This is important because you're going to have a draw period, but you're going to have a repayment period. It's important during that repayment period to abide by your debt obligations, by your obligations, okay, and repay whatever you have to repay. It's very important. Let me talk to you now about collateral. Okay, this is very important. Now, let me just clarify things here. No collateral is needed for an unsecured line of credit, but you want to keep your assets in check just in case the bank might want to see them, right? That's what it is. So we are talking about unsecured lines of credit, but if you don't qualify for an unsecured line of credit from your bank, And if you have assets, look for a secured line of credit, especially if you have low income and you have a fair credit. It might be a lot easier to get a secure line of credit. Okay, remember that. One thing I want to say here is that requiring collateral for a personal line of credit is uncommon, but not unheard of. Okay, so generally, secured lines of credit have more competitive interest rates, larger loan amounts, and more favorable terms. You know why, right? Because the thing is, the bank is looking at you and thinking, oh, okay, you have skin in the game. So something happens or whatever, you can't repay the loan or line of credit, they will come at, they'll just repo the asset, sell it, and recoup their losses. Okay, so collateral can include a house, car, boat, and so forth. Whatever a lender is willing to hold as collateral. Remember, it must be fully paid. Okay, because if you have a car for which you have no ownership, you can't use it as collateral. It's not your assets. Okay, and your home. Your home real estate can be the biggest source of equity for many people. So if you have a mortgage on a property, there still may be equity available to tap. So if you could take out a home equity loan, which is basically a second mortgage, this could be better instead of going for a personal line of credit from a bank. Okay. You can also think about your vehicle. Oh yeah. Your vehicle, you can use your vehicle as collateral when you still have equity in the assets. Okay. And this may be a better choice than, say, a payday loan. Okay. But remember that you risk losing that vehicle if you can't make the payments. The vehicle will be repoed. Okay. So those are consequences you need to think about. If you have investment accounts, let's say you have a CD, a certificate of deposits, for instance, or other investment accounts, you can use those as collateral. Not a problem. Now, remember, using this account as collateral might prevent you from accessing the funds in the accounts, which is a downside to consider. So here are a few pro tips. If you want to use collateral, make sure that the collateral is something that you can risk losing. In other words, because this puts additional pressure on you. Okay, you want to appraise the collateral before offering it as a security to the bank. Okay, so you have a clear idea of what the asset is worth. Okay, and make sure that you always discuss alternatives with the bank before offering up your collateral. Very important. Next thing I want you to do is your FICO score. You want to pay attention to your FICO score. This is very important because you have fair credit. Okay, that's fine. You have low income. Okay, that's fine. But what if by chance your score were actually higher than the 680 or the 670 that you currently have? This could be a possibility. So the only thing you can do is you can actually check your credit reports to ascertain, to make sure that the number that is in there is actually true. And you want to review the 3 credit bureaus, not just TransUnion or Equifax, but also Experian. Okay, those 3, you want to review them and make sure that you have a clear idea of the data in each of these reports. Okay, so after you ascertain the data, you are clear that it is accurate. It is about time that you increase your FICO score, right? So pay credit card balances strategically. You want to ask for higher credit limits if possible. You want to become an authorized user if possible. You want to systematically pay your bills on time. Paying bills on time is really important, but not just because you want to show a history of financial responsibility to the bank, but also keeping your DTI low. Remember, I was talking to you earlier about your DTI. So if you want to keep your DTI low, you have to pay your debt. You have to pay your credit card bills and whatnot. Okay. And if there are errors, if there are some mistakes on your credit reports, dispute them. You can actually contact the data furnisher. In other words, the institution that provided the data in the first place, or you can contact the credit bureau, the credit reporting agency directly, Equifax, TransUnion, or Experian, and ask them, hey, listen, I have this issue on my credit report and I want to fight it. What are the procedures? There is a procedure you have to follow to dispute items on your credit report if you have derogatory items, okay? And deal with collections accounts. Use a secure credit card if you want to increase your FICO score, okay? And you can also get credit for rent and utility payments. We have covered this on other shows, and you want to add it to your credit mix completely. But credit cards they play an important role when it comes to your FICO score. Okay, credit card. Why? Because your revolving lines, your repayment history. First of all, your CUR, your credit utilization ratio, accounts for 30% of your FICO score. Right off the bat, that's important, right? And then you have your repayment history that accounts for 35%. So those two, when combined together, you have what? 65%. That's nearly 2/3 of your FICO score. That's huge. Okay, and the other three elements accounts for 35%. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sorted Kiwi Show. I'm still having a conversation with you about bank personal line of credit for fair credit and low income. How do you get approved right away the first time you apply? And if you want to get approved, you want to actually show a history of positive net worth. This is important, okay? Net worth and low income may sound dichotomous, contradictory, right? But they can correlate. Hear me out here. Well, if you have low income, that doesn't mean you're not saving money. You can still save. Even if your saving levels are low, you can still have a CD. You can still have a savings account. You can still have a money market account. You can have an IRA. What I'm trying to say here is that when you have low income, you have to adapt your income to your expenses. You have to spend less. Okay. So net worth and low income are not that dichotomous. They're not that contradictory. Okay, you can actually correlate the two. So what is net worth? So net worth is basically the difference between your assets and liabilities. That's just what it is. Okay, nothing complicated. Difference between your assets and your liabilities. So you actually subtract your liabilities from your assets, and hopefully you have a positive number. So you have a positive net worth. Okay, that's just the basic dictionary definition of the concept. Now, if you want to increase your net worth in a process of boosting your approval odds for your bank personal line of credit, you want to review your liabilities. Okay, take a detailed look at your liabilities, and liabilities, by the way, means debts. Okay, and you want to look at every single debt, your credit card debts, your loans, your student loans, whatever loans you have out there, personal loans. Okay, and you can do this at not only at the individual level, but also if you are in a relationship with someone, you are in a household, look at the household's assets and liabilities in general. So the first thing, you want to review your assets. Number two, you want to review number one, you want to review your liabilities. Number two, you want to review your assets. So you can have maybe your primary residence, your vacation home and rental property, for instance, your investments, some collectibles. Okay, you want to trim expenses, really important, so that if you want to increase your net worth, you need to reduce expenses considerably, whatever you can. I'm not asking you to start eating the same food every single day. No, you want to actually trim expenses strategically. Okay, you want to pay off your mortgage, you want to pay off your credit cards, you want to invest for income. This is really important. So big decision time. Where are you at right now in terms of net worth? And most importantly, what is your strategy when it comes to raising your net worth? Have you thought about that? If not, you should. Very important. Let me talk to you now about co-signing. Boss, I'm still having a conversation with you here because we are speaking about bank personal line of credit for fair credit and low income, and how do you boost your chances of approval right away, right? And so find a co-signer for your line of credit. Oh yeah, this is important because if you by yourself, let's say the requirements for this line of credit are really a very far above your mileage. Let's say you are making $18,000 a year, and the bank wants you to have 30 grand a year in income. Well, how are you going to actually make up for the delta here? The delta between 30,000 and the 18,000 you currently have. Well, this can come from the cosigner, but make sure when we talk about cosigners, there are three things I want you to do. Okay, make sure the cosigner has better credit than you. Make sure the cosigner has better income than you. That's the second thing. And the third part of this trifecta is to make sure that the cosigner understands the legal and financial implications of co-signing a loan or a line of credit. Okay, this is very important. And so if you find yourself in a scenario where you need to actually find a cosigner, try reaching out to friends, okay, to extended family. I'm talking about your aunts, your uncles, your cousins, okay, your spouse. Of course, you should always start with your spouse, parents, grandparents, sibling, or someone similar. So that's the core group. And if you don't have any sort of luck in that core group, then you go to friends, then you go to your extended family, then you go to your mentors. Yeah, if you have personal or professional mentors working with you, they may be a good option. Okay, but keep in mind they will need to know you well enough to trust you and to trust your financial habits. Okay, and you can also talk to your parents' friends. Okay, this is something you can do. Okay, and if you cannot find a cosigner, the thing is you're not out of options, not at all. But your best bet is to work on improving your credit. Okay, this is important because if you can't do things with somebody else, then you want to do things yourself. But doing things yourself may be hard if the bank you are considering when you are considering in terms of the personal line of credit, if their criteria are way above here and you are way down there, the delta is kind of hard to bridge. So keep working on your income, keep working on your FICO score, and once you have those two elements right in sync, you can reapply. Okay. Thank you so much for your attention. I really appreciate it. In today's conversation, I was talking to you about the bank personal line of credit for fair credit and low income. How do you get a massive amount the first time around? And in the steps category, I talked to you about having an MPR, a strong MPR, a low DTI, explain the use of loan proceeds, talk about collateral. We talk about your FICO score. We spoke about your net worth, and we also spoke about co-signing. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.